Ascendis Health has secured a R1 billion funding package so that it can fund additional growth. Chief Executive Karsten Wellner is with us in our JSE studio. Karsten, it is an interesting story, Ascendis. When you listed, a lot of, not skepticism, but you were not really taken to the market's heart. But my goodness, in the last 6 months, the share price going from R9.50 to $16. Now you secured some more funding to continue on your acquisitive trail. Why do you think it took so long? Because you were listed for about 6 months before people woke up to the opportunity.
I think the market was waiting to see, do we deliver to our promises? And we made some promises in the pre-listing statement. At that time, we also talked to the market, is there time even for a corporate bond? And the market said, wait, it's maybe too early. You're just listed in November, and don't wait for 2-3 years, bet your acquisitions down, bet your business down. But we had the feeling that our business model is so strong and our business case, our strategies are so sound that actually we said, no, let's try to get a corporate bond. And Standard Bank actually gave us a 450 million bridge to bond facility. So it was Standard Bank and Sanlam 1 year ago in May last year. And it was always seen that after 1.5 years would change it to a bond. So they believed in us at that time. And now with this 2 billion DMTN program, which was listed now with the JSE. Of
DMTN?
The Domestic Medium-Term Notes program, sorry. We listed that with the JSE, so we can draw up to 2 billion without further approvals by the JSE. And we drew now 400 million. Plus 660 million of working capital facilities with the major banks. And when we talk to them, you go through their credit committee meetings, and the credit committee meetings, you have really to convince them. But we could convince them. They did a very diligent process going through our numbers. And yeah, and in the end,
lots of people have got ideas and dreams, and I would like to consolidate a fragmented industry. We saw Peter van Zyl just now from York Timber. They would love to be able to get this fragmented industry together, which is something along the lines of what you're doing, but they're not getting any money. You're getting plenty.
Yeah, we actually, I must say, we are proud of this because after you say it right, the story is, I think they believe in our performance. They see that what we promised 1 year ago when we went to the market, acquisitive growth, organic growth, and synergistic growth. We delivered on all the 3 areas. We ticked all the 3 boxes. We over-delivered our numbers, so that also helped. In an environment where the debt market after the African bank story, of course, is difficult to access. But if you convince the credit committees from Standard Bank, FNB and Nedbank, Standard Bank and Nedbank being the lead banks, then FNB came on board. Then on our bond, it's Future Growth, a subsidiary of Old Mutual. And on top, Sanlam. So these are top institutions. So if you convince all the 5 credit committees of these banks, then it looks like our business model is sound. And we have proven this with our annual results. I was in your show a few weeks ago where we could present our results, which were very nice according to the expectations, even a little bit a tick higher. So I think that's the thing of keep to your promises. And that's the story, I think, behind it.
If you go back a little, though, before your listing, did you, at that stage, had you identified these companies that you've now acquired in your acquisitive growth story?
Some of them, yes, and some of them not. Acquisition processes take sometimes very long. We acquired, for example, a sports nutrition business called Evox, which is the 2nd biggest in the market presently here in South Africa. And that took us 3 years to convince the seller actually to sell to us. So it's sometimes you have to have this bull terrier instinct.
Why did they sell to you? How did you convince them?
I think the major reason for this was the guy couldn't get more working capital. He wanted to lift his business on the next level. And USN, the market leader, did this by internationalizing, getting access to new funds, and with the access to new funds, being able to internationalize. The gentleman who had been running Evox had done this very successfully, created a great South African brand, but he hasn't internationalized yet. And I think he came to his limit of working capital and his limit of expertise, where he needed a little bit more corporate expertise to help him to go to the next step.
But why you? Why not somebody else? Why not
because
go and talk to the credit committees?
It's a good point. Sometimes we get asked this question, and the reason I think is that our acquisitions team around Coast to Coast, where we have actually outsourced our acquisitions work, is very focused on doing acquisitions work, and the Ascendis team is very focused on steering the acquisitions work, but actually focusing mostly on the operations.
So Chris and Gary,
Chris
the
and
Warren Buffett, Charlie Munger lookalikes,
exactly.
not physically, but in the way they think, they're the guys who go and do the discussions and say, this is what we can offer you, almost like what Berkshire Hathaway tries to offer.
Yeah, we actually give the strategy. We would like to invest in this and this company, and then they actually screen the market, sometimes for years. I remember there was another company we bought, a very successful one, Solal. Solal, very strong in the high LSM complementary business like nutraceuticals, vitamins, and they're very strong in the discounts in South Africa, but also in the clicks and in other health corners in supermarkets. It took also, Gary, 2.5 years of constant negotiations. Sometimes they wanted to sell 51, then they want to sell 70, then they want to sell not a majority. So you have to be diligent and have not to overpay. I think that's also important. Even being a listed company, people see we still stay humble, but at the same time we're giving these entrepreneurs a base where they can grow their business and focus again what they're strong in.
What is their stake now, coast to coast?
53%.
So they're still a controlling
shareholders. Still controlling.
So you run the business, they do the acquisitions, and it's a marriage made in heaven. So far,
it looks like, and it works for us, and we are very happy with that.
Karsten, good talking with you as always. Karsten Wellner, the Chief Executive of Ascendis Health.